Hello, everybody, and welcome to the Big Money Flow Show. Andrew is off today. He's got a family thing going on. So it's going to be me. Leisha's going to be joining me in a little bit. And we do have a lot of guests. So I want to give you an update on what's been going on with big money trades. So on Wednesday, I met with everybody, all of my new lifetime members and my new annual members. Great to talk with them. Great to go through some things. We've already done a trade and talked about markets and kind of broke things down. That's going to be the way this show normally is. We break down some trades and then we give you what we see in SPX and VIX and potentially another trade as well. Alicia is going to be potentially throwing out a trade she's looking at later in the day, along with what we're seeing in big money. And again, I want to remind everybody why big money is so important and why what we do is important. All right. Trades can be confusing. All right. Even big trades can be really confusing. And so here's an example. Yesterday, I don't know if you guys saw this. I want to pull this up for you guys. Yesterday in Ford, check out this trade. All right. And we're going to go to yesterday. Yep. I want to show you this trade that went up. And you're going to be like, wow, that's a big trade. So check this out. The October 22nd, January 10 calls. Traders sold 151,000 of the January 10 calls. All right. Seems pretty cut and dry that they're bearish, right? Or are they? All right. Now look at the underlying trades. And I'm going to show this to you. They traded 14 million shares of stock. All right. They traded 14 million shares of stock at $14.19. So yeah, you know what? They did sell calls, but they traded it delta neutral. So the other piece that's important is that we look at the January strike, and yesterday the open interest on this strike was about 250,000. Now it's 138,000. So what was that customer actually doing? They were closing a trade. All right. They're closing their winning trade and then converting it into stock. All right. So is that bearish or bullish? Can I bring the stock purchase up one more time? Sure. Right there. 14 million shares. All right. So pretty bullish, but yeah, no, there was about 11 cents of premium left in the option. And so what the customer was doing was converting the options into stock. So the point is that I don't know that that's really overtly bullish or overtly bearish, but what it isn't is a clear-cut trade. It's not a clear-cut, hey, look. All right, how are you going to lose here? All right, now, let's look at one that maybe what is a little bullish. And then I'm going to show you some trades from today. Bed Bath & Beyond. All right, had a pretty rough day yesterday, right? All right, well, Bed Bath and Beyond. I like to call it Bloodbath and Beyond. Bloodbath and Beyond. Trader sells 12,750 of the 14 puts at 27 cents. They sold, it looks like, over the course of a few minutes, they sold what amounts to 13,500 of these. All right. It's not, it's either bullish or the forward trade is either bullish or neutral. It's not bearish. And so in this trade, right around 942, 941, so right after the bell opens, we get a trader coming in and unloading October puts. Right? Just unloading them. So what does that mean? All right, well, now we're not done, right? We need to go see a couple of things. Right? We need to see, is there stock associated with this trade? All right, well, we're up to 944, and we still don't see any stock. So as you can see, there's no stock with this trade. Now, is it closing or opening? All right, let's look at that October put. Well, today the open interest is 18,000. Yesterday the open interest, all right, so the open interest was 12 yesterday. So it was an opening put sale. All right, and you can see he or she was right. The stock found footing. All right, and the and now these puts have already lost about half their value. So he sold puts on the dip. All right, and so that was at least not bearish anymore. What that trade tells me is that I don't want to get short Best Buy here, right? Why? Because traders are basically saying this ain't going any, a lot lower. So the value in Best Buy, the value of being short in Bloodbath and Beyond is likely gone. And if you'd have bought puts yesterday, you would have gotten worked over at that time. Kind of cool, right? All right, so let's go through what we're seeing in big money trades today. All right, now we've already seen a couple. And the first one that I want to look at is in KSS. All right, KSS. What is KSS? KSS is Kohl's. All right, Kohl's Corporation. I think we could, I don't know that there's any arguing that yesterday was an unmitigated disaster for Kohl's. I mean, it doesn't get much worse. All right, so what are we seeing today? I will show you. We're going to go to November. Now remember, they have earnings around the 16th. And what do we see that went up today in November? Do you see the option volume here, guys? You've got the 57.5 calls that have traded 10,000 times and the 67.5 calls that have traded 10,000 times. What's going on here? All right. What's going on here? Well, let's unpack it. All right. So in one clip, the trader bought 7,750 of the 57.5 calls for 87 cents. He or she sold 7,750 at 13 cents. So they lifted the bid and hit the offer. So they went long a call spread. And then you can see they looks like they traded it with the market makers as well. So they bought another 2,250 through the market and then crossed the rest. All right, cross means the broker trades both sides of it at the same time. All right, well, let's unpack what's going on. Well, we know it's opening, right? Remember, we looked at that open interest. And there is none, right? 900, 710. So they went long they went long the 57s and short the 67s. And they paid 74 cents. After it got absolutely smoked. The high is about 57. All right, well, now, is there stock? All right. Well, the trade went up at 950. There is no stock. So what is this trader doing? All right, they bought a call spread. It's opening on both strikes. And they didn't do any stock with it. What does that tell us about this trade? Very bullish, right? This is a pretty decent shot, right? So they paid 71 cents. All right, they paid 71 cents for these. All right, how many times did they buy them? 10,000. It's a good $710,000 bet on that is $10 out of the money. All right, so I'm going to go on a limb that, well, they already said that's why they got that they're going to have supply chain issues. So who can solve those supply chain issues for them? Who could solve those supply chain problems? Who do they have a partner with? All right, so Chris got it right. Chris says Amazon. Yes, you can return your Amazon packages to Kohl's. And actually, I believe they've got lockers there, things like that. Yeah, Amazon and Kohl's are buddy-buddy.
You said burger.
I said buddy-buddy.
Buddy.
Okay. It is a really interesting setup. All right, now, we know something is going on there. All right, now, here's the thing. It's an earnings month. So here's where we start to, now remember about these big money guys. And you can already tell by this guy. All right, they're big. They're powerful. They have lots of money. All right, when they push a button, things get done. All right, they're the shark. All right, they're the shark. Who are we? We're the remora, right? You guys know what a remora is? Yeah. All right. A remora is kind of like a succubus. It latches onto the shark and it eats all the stuff. All right. It eats the things sharks. Yeah. It feeds on all the stuff that comes off a shark's mouth. All right. Because sharks, all they care about is getting that fish in their mouth. They don't care about all the scraps that they leave behind. Right. We're going to look at these scraps and we're going to be better than these guys. All right. So here's what I mean by that. Take a look. This top line here shows you, it's titled Sigma. This is the consolidated implied volatility for each contract. All right. What do you notice about October through November 12th and then January on? And then what do you notice about November? Yep. One of these things is not like the others. One of these things just isn't the same. Good old Sesame Street throwback for you folks. And so what I want you to see is that there's better ways to do it. All right. Now, I'm going to start by telling you this. The 57.5 calls, if you want to play in November, there are much better plays than the 57.5 calls. All right. Those are really far out of the money. It's going to take a big move. And you can make a lot more going close to the money. But I'll bet you we can do even better going out to January or even looking just at the week in front. So here's the beautiful thing. All right. In a name like Kohl's. All right. I don't want to deal with the earnings. There's something going on. All right. And we think the stock is going to get a lift. All right. So here's a question. All right. The trader spent $700,000. All right. Could we spend $700,000 in a better way? Yes. Yes, we can. So one of the things I like about the Nov 12s, what do you guys think I like about the Nov 12s relative to regular November? What do you see as the kind of the difference between the strikes? Well, yeah, but the other thing is, look at the increments. Yeah, the dollar wide. So November has dollar wide strikes all the way up to 60. November, the regular November, the November 19s, are only every 2.5 points. So in looking at November, I have a lot more flexibility. All right. Now, here's the thing. We just got done watching KSS get its you-know-what handed to it on a plate. Right? Right? KSS, it's up a quarter after being down. Let's see, yesterday it closed on at 53.66 and then closed 47.09. That was a nice move. This is a really nice move. So, The question is the chart, right? We know the implied volatility is a little high. Might actually make. There was a warning on supply chain. Believe it or not, this might be a really interesting put sale. All right, the way this customer set this thing up, this could be a great put sale. You know, the November 45 puts return what, 6-7%? That's not a bad sale because the vol is high. All right. But really what I would want to do is spread. I get why the traders spread because the vol is high, right? People want to know, all right, Mark, when do I use spreads instead of regular calls and puts? I get that question a lot. All right. And the answer is when I've got vol that's in kind of a weird spot. All right. This is another thing we're going to teach you. By the way, if you're interested in joining us and getting in on all this big money flow and trading with us, there's still time to join us, right? We still have some of our launch pricing available. And if you're interested in getting in on lifetime, the form is no longer available, but you can probably call Ted Trapezzano, all right? Support at optionpit.com. Here, I'll drop that in chat. His email is support at optionpit.com, or you can call him at 888-872-3301, and Ted's going to take very good care of you. All right. Oh, I'm glad you are, David. We're very happy to have you on board. So I can come up with a trade that is pretty similar to the one that we saw, that is much better from a volatility trading perspective. All right. So let's start off with the fact that selling the 67.5 at 13 cents is just ridiculous. All right. And the fact that the 52.5 calls and the 55 calls are pretty cheap. So the 50s are too wide. Right? Look at that. I don't know why they're so wide. Yeah, they're starting to tighten them up a little bit. But even the 47s are only $4. So there's a lot to unpack with KSS. Now, we're going to come back to this one, but this is not my only trade that I want to look at this morning. All right? I've got two more that I want to talk about. Well, can I define volatilities in a weird place? Yeah, look at this. We're now kind of right in between where it hits its highs and where it will kind of fall to. So it's kind of middling. What platform I'm using? I'm very platform neutral, but I can show you the exact same things in KSS using TD. You can see the volatilities are a little different because maybe they use a different model or whatever, but same rules apply. You have higher volatility in November than everything else around it. All right. So, Leisha, are you here?
Yes, I'm here. How are you?
I'm good. How are you?
Good.
All right. Say hi to everybody.
Hello,
Smiling
everyone.
face.
Am I on there? I can't tell.
I just asked you to start
Oh,
your
here we
camera.
go. Okay. Hi.
All right.
Good analysis of coals. Very good.
What are you seeing anything on now? I know this is a tough candle chart to break down. All right. Are you seeing anything here that provides us anything?
You're right. It is a tough When things gap so dramatically like that, it's hard to say what they're going to do immediately. It's almost like starting a new chart almost,
It
but
is almost like starting a new chart.
yesterday's is almost a hammer, but not quite, because the red body should be shorter
Yeah.
and the tail should be a lot longer.
Mm-hmm.
But I think your analysis supports your trade idea,
Yeah.
definitely.
So I don't know.
And
Are you
it could be
seeing?
overdone and it could bounce from here.
Yeah. Are you seeing anything that looks interesting? Right now, I'm looking at one. I think the no 50. If I was going to buy any strike, I would not be the 57 and a halves. Although those are relatively inexpensive compared to some other things. I certainly wouldn't sell a 67 and a half call at 13 cents. It's like, why bother?
No.
It's like, what's your main goal here? So, the two things I would look at is I can buy and the markets are a little wide, so they just listed these, but I can buy like the 50 calls on the Nov 12s for maybe 240, and you're getting probably a decent amount of money for the 57 and a halves. Now this is really wide. January is also cheaper. Now again, when you go further out, you're paying more. The 50 calls are $40.
Did
But
you
a
look at
lot
regular
closer to the
no?
money.
How about the
And
regular no? Well, that's about $3 though. The 47 half,
yeah,
60.
that is, we're gonna go. Well, I'm gonna go look at that in 1 second. So $2.86 for the 50, 62 and a half call spread. If you can do that for about 285, 290, that's really good risk reward. All right, that's really good risk reward. And so that might be a way I would structure this. Regular Nov. Yeah, the 47 and a halfs are only $4. It moved more than that yesterday.
Right.
And you're right. The 62. Are you looking at the 62 and a halfs or the 60s?
60s, 60s. Well, look how wide those markets are. If you could sell the 60s for 70, it would be nice.
75, yeah. So, or how about, yeah, I mean, here's your trade, all right? If you're looking at playing no, the 50-60 call spread is going to cost you about $2.20.
That's good.
You're paying less than $3, probably closer to, let me put that. Yeah, you're paying about $2.90 for the 50 calls, and then you're selling the 60 calls at least 70. And if you're willing to leg it, you could probably do even better. If you're willing to put an offer out, because Kohl's is looking a little stronger today, as is the market as a whole, right?
Yes.
So I don't hate this. All right, there's one. So normally what we do is look at about 2 or 3 trades, and then I'll give you a little market analysis and VIX analysis. Next up, Royal Dutch Shell. Trading $45. And what do we have in Royal Dutch Shell? We have a buyer of 5,000 of the October 45 calls. All right. And we have another 7,000 of the 47 and a half trade. Now,
What price did that 5,000 lot trade?
35 cents.
Nice.
Or are you looking at the 45s or the 47s?
45s.
Oh, I gotta look. The 45's traded, and we'll pull this up, folks. This is the beauty of what we do here. So they bought the 45s for $1.20. All right, and they did this all as one trade. And then they did 7,000 for, I'm sorry, 40, call it 43. And it was done as a spread, which is interesting. But I think they bought it as kind of a stupid. I don't think they sold. They might have. So the reason why we would think they may be sold is because of the open interest on the 45s. So let's see. 10,000 of these traded for about, of the 45 calls, traded about 30 cents on September 15th. All right, so all right, you know what this was?
A call stupid?
It was a close and roll. It was a close and roll.
Oh, you're right.
All right. Now, why does this get me even more excited when we see the close and roll? So remember, at the time, the high of the day on these was 35 cents. The low was a quarter. They traded 10,000 of them. So they probably trade between 30 and 35 cents. All right. So Kat brings up a couple of things. All right. So why did this person roll? Because they think there's more upside. All right. But I think the other part is if they paid 32 cents and sold it at $1.20, how did they do on the trade? What do you think, Leisha? Did they make money on that trade if they paid 32.5 and sold at
What do you
$1.20?
think? Winner.
Yeah, they made like 300%.
Yes. Phenomenal. And
Phenomenal.
they think it's going higher.
And then the customer did the exact same trade, paid about 42 cents. So they paid, let's just go say they paid 30 for simplicity. All right. Then they sell out of 5,000 of them at $1.20. All right, so let's do some math here. You guys love when we do spreadsheets, don't you? All right. So they made, let's say, 90 cents a trade. 5,000 times. It's a nice $450,000 winner. And they still are open on 5,000. On top of that, they did 7,000 for, call it 40, what was my price? Call it 43 cents. All right, well, what is 7,000 times 43 cents? They spent $300,000 on more calls. So let's do some math here. This person has banked enough cash to cover their entire initial position. They're hanging long 5,000 of the RDS 45 calls. And then they rolled up to the 47s. And we know this person has been right. And we know that oil's going up and there's gas shortages.
Look at the 2-year chart.
I'm going to look at it. Let's pull up the 2-year chart here.
It was $60 beginning of 2020. It just broke over its recent high in March. So yeah, they think it's going higher.
Yeah?
It looks like it could.
All right. Now, so here's a question. Which trade do you think is the better trade? Do I like, and we haven't done vol analysis, but But off the back, if you guys were to just think about these two trades, Kohl's, all right, got absolutely slammed, and then customer making a gamble on a rebound, versus Royal Dutch Shell, shorter dated trader, staying long, ramping up. His or her RDS position.
Wow.
Pretty clear, right?
I have to say though, not to throw a wrench in it all, today's candle could be a doji. But that doesn't mean it wouldn't, it could come down and take a little bit of a pullback and then go higher.
Mm-hmm.
A lot of times they need to come back a bit to get the momentum to bust through that,
Yeah.
any kind of resistance.
So I really like what I'm seeing here. Can I find a better trade than buying the 40 calls for 35 cents? And here's your answer. There is a cheaper option in October, and it's the 46 calls. The 46 calls are 60 cents. And if you look at the implied volatility, all right, let me pull up. You guys know I love a good skew chart, right? Here's your 47 calls. Here's your 46s. Here's your 45s. The only call you don't want to buy is the 47 calls, folks. Right? Do you guys see what we're doing here and how we're able to find awesome trades and jump on them and trade with them? All right? This is one I could do. Normally my trades are going to be, when I do a trade in big money flow, I price them for about $1,000. All right? But you can do 500, you can do 250. All right? You just do less of it, right? I like having multiple options so that I'm able to, trade, manage my exits. So that's why I think that big money flow is big money trades is such a great program. All right, you're getting this live interaction with me multiple times a week. Every day, I send you an email with the trades I saw from the day before. All right, and there are some fun ones in there. One of the ones that we sent out last night. All right. Yeah, you get me, you get my team. All right, with 120 years of experience. Leisha only has like 5 because she's a spring chicken. But every day you get this type of interaction with me and my team. And you get this knowledge, right? I'm teaching you how to do this. All right, and we have we have our kickoff event coming up. That's going to be on October 14th. We also have, if you email Teddy, we will send you our big money flow checklist. All right, because remember the checklist is spot the flow, confirm the flow. All right. Then authenticate it, and then optimize it. And we just optimized it, right? We know that the 46 calls are a better purchase than the 47s. In fact, that vol is so high, very rarely do I... Yeah, the bid is 0 on the 46, 47, 47 and a half in RDS. It's 0 at 15 cents. So there's some, like, you could even potentially set up like a little baby butterfly here. Because the 47 and a halves are way cheaper than the 47s. So the point is, this guy pushed around implied volatility and paid up. All right. And so you don't want to do what he's doing. You want to buy the 46 calls for 60 cents. And you can see, I can see some of you trading it already. And this is the type of trades that you're going to get from us. So what I would probably buy like 10 of these for 60 cents. Mostly a little less than 1,000 because these are really short dated. And so when things are short dated, we do less. All right. But the potential to make is a lot more there. So is people buying the 47s? Yes, they're buying the 47s. That's why the implied volatility is so high there. So this is why I want you to join us. All right. I want you to call Teddy. You've got the order form to join us. If you want to get in our programs, if you're a member of one of our other programs, let's say Sharp Bets or things like that. All right. One, if you're Sharp Bets and you're an annual member or a quarterly member, guess what? You're getting rolled into this. But if you want that lifetime membership, all right, you need to talk to Teddy. If you're new here or you're not a member of our team yet, then give us a call, click on the link, and join us. All right. Just as just to give you a heads up, the trade from Wednesday for you folks that did not get involved was IGT. All right. IGT, we bought the 28 calls and they are up really nicely. All right. Who's in anybody here and buy those IGT calls? Yeah. How are you feeling today? You liking what you're seeing here? Yes. Looks real good. All right. We're going to get one more leg up here, and then we're going to be some money in the bank. All right. So, yeah, IGT, we did, and I really like the way that trade sets up. So KSS, and here's one difference. All right, you may have seen me in other places. All right, this is my home. This is where I live. This is my team. I surround myself with the best traders in the world. All right, so a couple big differences. One, I don't have any price limitations on what I can buy. Those IGT calls were what? Leisha, what did we buy those IGT calls for?
230.
230. They're $3. All right, so they're up 30%.
I'm sorry, 260. 260. I'm sorry.
All right, so they're up about 15%. Great start. All right. I can do whatever I want here. So the way we're going to do this is, generally speaking, in these meetings, I'm going to teach you two ways to trade. All right. I'm going to give you the simple trade. And in this case, all right, we're looking at the Royal Dutch Shell options. All right. And I want to buy those calls in Royal Dutch Shell. All right. And the difference is that I'm not doing paper, right? I'm not pretend trading this. All right. Generally speaking, I'm going to do 1 or 2 to prove an entry point. I got filled at 60. Then we would put a trade out. All right. Then we put a trade out. And from there, you're a happy camper. Yes. So David asked, do we have exits for IGT and RDS? You're going to get, when I do a trade, one, we put out a text message that goes to your box. So here, I can show you what they look like. Ooh. Let me get one of our trades open. Here you go. So I'll show you this, guys. You know, you get text messages that lay out the entire trade. All right. I don't know if you guys can read that or not. All right. And it's a beautiful thing. All right. Then you get an email with a breakdown of the trade. And David, if you look in your email with the trade that we sent you, I actually give you all my risk limits. And then in the video, in our discussion today, I'm going to give you the risk limits. So in RDS, all right, if I'm buying the RDS October 46 calls, all right, paying 60 cents, all right, I want to take off about half of my position at $1. Then I'll take off the next half. So if I do 10, I take off 5 at $1. Then I'm going to take off about 3 in between $1.20 and $1.50, and then I let the last couple ride. All right, and we really let it ride. All right, now we will have some unbelievable returns sometimes when these gap. All right, and at the cost of this service, if you look at where our track record is, it pays for itself. It'll pay for itself since we switched to this big money flow. It'll, past performance obviously not a guarantor of future, but it's going to pay for itself in 1 or 2 good trades. So yeah, I want you to join me. All right, that's 888-872-3301. And so join me, trade with me, be with me live. We also have an amazing amount of education that we're giving you with this course. And over the weekend, I'm building a kind of get you off your feet and get you started course that's going to be really awesome. And don't forget, we've got a 2-hour kickoff where I'm going to give not 1, not 2, but 3 big money trades. I'm going to take you through the whole process. All right. Now, if you're saying, Mark, what is the RDS kind of more complex trade you would look at? Well, if I wanted more time, and then we'll wrap up. If I wanted more time, and I always want more time, all right, I would want to push it back a little bit and maybe look at the November 5th, which is the cheapest option that isn't October. And again, you can see the 46 calls are cheap. So what I would be doing is buying the 46.50 call spread. It's a 4-point vertical. It cost me less than $1. All right. And it gives me almost another month to look at this trade. Do people have any questions for me about big money trades and about how to get in there? All right, now on SPX, let me just give you, while I'm waiting for your questions, on SPX, you know, it looks like we got a real shot at getting ahead of steam here. All right. And don't be surprised if we make a run at 43.5. I think the VIX is going to be sub 21 by the end of the day. UVXY and VXX could have a bit of a bloodbath today. Like this would be one of those days where they're down a buck or two. Trevor's asking, is there any big flow in Disney? Not today. Not so far. All right. So if you want to join us, we've dropped the order form in there for you to potentially join and sign up. If you have questions, call us 888-872-3301 and join in our movement in taking these big money trades that these sloppy, lazy sharks put out. And then we're going to be that smart remora and do a lot less work and make more money. The remora eats more than the shark relative to their body weight. You know that? David, that's a great question. Call Teddy, and he will be able to help you with that for sure. All right. Mark, what's your take on MRK options? You know, we have been seeing some flow in MRK. It is absolutely blowing higher. I mean, if you look at, this is like the breakout of breakouts. You know, what do you think, Alicia? You're the chart person. What do you think?
I think it's hitting resistance at its top today. If you look at the 2-year, probably the 1-year even. Oh no, you have to look at the 2-year. Back in September of 2020, that was the top. So there could be some resistance here. I don't know. I think it all depends on how that pill pans out.
It's through the highs for the year. And the high for the previous year was let's see, is that
it's right there at 84.
Yeah.
Today's high.
Yeah, 88 was the previous year. Today is the high. So, you know, it could make a run at the 2020 high.
I think people are more willing to take a pill than a vaccine, probably.
Yeah, well, and take a look at Moderna, right? Look at the run-up it had. Look at that. It's unbelievable. And now Pfizer didn't get that.
Pfizer has been a piece of you know what.
But, you know, every time Pfizer, you know, here's the thing. You want to buy it until it gets approved by the FDA, then you want to sell it. Does that make sense?
Yep.
So I think that this could be the beginning of MRK. Now, obviously, I don't know that I'm going to go, like, you know, 2 hands in long. But, you know, MRK options, despite it being up $7, they're still only 28%. The Jan 85 calls. Now, this stock is up $7. The Jan 85 calls are $2.93.
Yeah, that seems...
The 95 calls are 90 cents. You can put on a 10-point vertical on a stock up a huge amount of money. And this is the other part, right? We take a question and we'll turn it into trades in the Big Money Flow show. We'll help you. Yeah, so... So yeah, if I can pay $2 or for the 85-95 call spread out to
And
Jan,
Jan,
I
yeah,
think that's gonna pay.
I like that one.
And Leisha's a better trader than me, so if she
Yeah.
likes it, then you know. All right. Does anybody have any questions about big money flow or about what we do here, how we do it, and how we're gonna make money? All right. Again, that number to join us is 888-872-3301. And Leisha has dropped that link in for you guys to join us. All right. So the question is, why are 1,000,000+ trades not reviewed? How many trades do you actually want me to review? I don't know that I have the bandwidth to review 1,000,000 trades, Peter.
I don't think that's what he means.
I don't think that's what he means either. You're asking, why aren't we looking at trades that cost $1 million or more? Well, because every stock is different. Every stock is, $100,000 in a small name can mean a lot more than $1 million in a name like Apple, or in a name like Amazon, right? Or so 1,000,000 contracts and up. I don't know that we've ever seen a trade that had 1,000,000 contracts in it. 100,000 is a ton. Are you asking why don't we review stocks that are already at 1,000,000 contracts on the day? That's a part of what we look at. But big money flow is not just about, because there are stocks that trade that much every day. Now, when you get a big outlier stock, that can tell you something. All right. So what we're looking for is not, stocks that trade $1 million in contracts. What I care about is stocks that normally only trade 1,000 contracts that traded 50,000 today. That is a lot more meaningful than ones that have 1,000,000 contracts. All right, folks. I don't do $250,000. I never did iron condors, frankly, on the floor. So again, I want you to join us, be a part of our team, and let me and my team help you make money with our trade ideas, and then teach you to make your own money by sending you our 5 best trades that we saw, and giving you the education to learn to trade this stuff through yourself. So not only am I going to give you the trades, I'm going to teach you how to be a good trader. All right, folks? The MRK spread that I was looking at was the January 2022 85-95 call spread for about $2. So I'll drop that in there. But the trade I really think is the best one we've seen is the RDS.A, OC 15, 46 calls for 60. So join me, guys. Join me, and let's take it to these sloppy guys by taking their trades, doing it better than them, and feeding ourselves a nice meal. All right, guys. I want to say thank you. Leisha, thank you for the help.
Thank you.
And I really appreciate everything that you do. And everybody have a great weekend.
TGIF.
Absolutely. Have a good day, everybody.